Hello, my name is Jay Young, and I'm from Dallas, Texas, and our project is called the Larimer County Energy Project, and so I'll be telling you about that. Anytime you want to stop me, please feel free. These are forward-looking statements from our attorneys that say that oil and gas is risky. We'll talk about the risk and what kind of risk we feel like that we're mitigating in this project. Right now, we're seeking industry partners for a direct investment in an oil and gas project. We're seeking $75 million of capital commitments, and we feel like that we will only get down to $40 million invested. Because of capital, we're going to call for capital quarterly, and we feel like that we'll only call for $40 million. And we have our engineers have come up with the best value of $400 million in 2 to 3 years, and we'll go over that. We will go over how we derive at that number. So we're in Colorado, which is a very good place for oil and gas. It's a lot better in my opinion, and I'm from Texas, so we've drilled a lot of wells in the Permian, East Texas, and so forth. We like Colorado better for this investment because a lot of wells have been drilled in the Permian. There's more layers that have been found in the Permian, and right now there's so much inventory for companies. They're not looking to buy. That's why I asked the question earlier today about what they thought about people, then how much acreage they have and how many wells they have to drill in the future with their inventories, because there's not a lot, and there's not a lot of financing in the Permian right now. It's really going to Colorado, because if you're in Colorado and you love Colorado, Anadarko's in Colorado, Warren Buffett loves that area, we can buy there a lot cheaper, and we have a lot better inventory for future development. Our project, we look for 200 to 300 different locations on the project that we're leasing land, and we're going to drill 20 wells, which we will go over that. It's a private ownership of mineral leases, geopolitical advantages, and tax benefits of drilling through the intangible drilling cost that's associated with oil and gas investments. Why U.S. private investment? Liquidity targeted in a relatively short period of time. My family's been in the business for over 100 years, and I understand the ups and downs of oil and gas, and we do not look at oil and gas as a long-term investment. I'll go into that in just a minute. But we look at it as a liquid investment, so all we want to do is have the capital equity necessary to drill 20 wells, because we'll establish value. And we want to establish enough value that'll make it worth it for our investors. Who we are, King Operating Corporation. I started the company in 1996. We're an oil and gas operator. We're not licensed operator in Texas and also in Colorado. And we look for assets just like this. This is our third asset that we've done just like this. Instead of drilling one well or big horizon type projects, we started doing this because of our investors. Who we are, we have a world-class team of engineers and geologists. And if you go to SMU, my oldest daughter goes to SMU, and they're on the school, Lyle School of Engineering. Bobby Lyle is a good friend of mine. We're both Eagle Scouts, and we're on a Boy Scout board together. But Bobby sold out. He was the first man to ever drill a well horizontally in the Bakken formation. First man to ever do it. Sold out, made a couple $100 million. And then he kind of retiring, and I said, "Where's your team?" And he said, our team is in, our team right here, Gary Dittmar and Charles Wiley, don't want to retire, but they still want to work a little bit. And I said, I'll hire them both. So I've hired Charles and Gary, and Ben Selecta is our engineer that has done a lot of the figures with Gary. But I wanted his people on my team because they've drilled hundreds of wells in Colorado in the Niobrara and the Cadell formations. Very important. We'll also use IPT, Integrated Petroleum Technologies. They've drilled 300 wells in the last couple of years up here in Colorado, so they know the rock. They know what to do. They know how to frack. They can get very good numbers. And when you have a company like this, they pay for themselves because they can get contracts for long-term drilling contractors or fracking or pipe or whatever the services that are needed. And it really does help. Who we are, my name is Jay Young, CEO of King Operating. We've been in the business for over 100 years. My great-grandfather was in the business, and he had 12 kids. And if you're a man, you're in the oil business, and if you're a woman, you're married to somebody in the oil business back when I was growing up. So we were all in the oil business, right? And all my great-uncles and everybody else. So my granddad told my dad not to get in this business. My dad told me not to get in this business because we have a lot of great-uncles that have died from cirrhosis of the liver because they drank too much. Well, in the oil business, they drank too much because you drink when you're happy and you drink when you're sad, right? So they drank a lot. So that's why we are short-term buyers and investors in the oil space with different assets, because we don't necessarily want to come in here and build this company up to $1 billion, $3 billion. That's not our goal. Our goal is to drill 20 wells and take a look back at what we want to do at that time. We feel like that our asset will be worth $300 to $400 million, and I'll show you the reason why. So also, I'm a Forbes book author. I've written books about oil and gas, and there's Steve Forbes there before we did a talk and interview a few months ago in Dallas. I'm a Ernst & Young Entrepreneur of the Year 2019 finalist, former minority owner of the Texas Rangers Major League Baseball team, which was real fun. Nolan Ryan was my partner, and watched a lot of baseball games together. We didn't win the World Series, but we do have 2 American League series. I'm also a Tiger 21 member. Maybe some people have heard of Tiger 21. We came to Hong Kong a year ago to try to start a chapter here, and we were unsuccessful. We feel like we'll get back to that. Okay, King Operating Fund 1. How do we do? How are we doing? What's our track record? We raised $37 million on our first fund. We started a couple of years ago. We've drilled some wells, we took on some debt, and we have the project right now at $200 million. We've made up to 100,000 barrels of oil per month, and that asset is worth over $200 million right now with $37 million in equity. We have a $49 million debt instrument against that. We're going to drill some more wells and sell this year. That is our goal. Proven reserves of 183 million by Netherland Sewell. Also, we have our second asset that we talked about is one in Howard County, which is where a lot of my family grew up. Matter of fact, I can stand there and I can see the house where my great-grandfather lived, and he was a pumper and oversaw a lot of production. Where my grandmother grew up. She was the oldest of the 12 kids. But you can see here from a lot of the science that we do before we drill, it's not a question of whether or not you're going to hit oil or not. That's not the question in Texas if you're going to drill wells. In Colorado, it's not a question of whether or not you're going to hit oil or not. It's how much and what are oil prices going to be, and also what's your trade with the operator that you have, if whether or not you're going to make money. So in this project, as the science, we use Schlumberger and Halliburton. In this project, as you can see, if you add up all the oil in place on this project that we're drilling right now, that there's 200 million barrels of oil per section, which is 640 acres, on this project. And we have over 10 sections that we have. So if you have 200 million barrels of oil in place in 10 sections, that's 2 billion barrels of oil that we have leased right now on this acreage project. Our goal is to drill a couple more wells here and then sell the project to somebody that needs it worse than we do, and that'll pay us money. Our projects, we want our clients to make money. We don't make money until the client makes money, so that's our goal. 1 minute? Oh, wow. So favorable economics in the DJ Basin is a lot better than the Permian. The internal rate of return right now is, let me see, the internal rate of return is over 80 to 100% per well. Let me just kind of go over this one to make sure. About the project, it's a $75 million capital raise. We will spend $120 million to go drill and complete 20 wells. Like I said, we want to drill 20 wells because if you drill 20 wells, you may have a mishap or two mechanically, but our value will get up there to the $200 to $300 million. At that point, we can sell. If we call for $40 million in capital and we sell for $400 million, clients are going to make a lot of money. If oil prices are not there at the time and we decide not to sell, we don't have to sell. We can get a reserve-based loan at that point, 5-6%, and we can go in here and continue to drill and sell when we want to. Okay? So we have a booth, obviously back here. We have a lot of appointments, but if anybody would like to meet with us, Ray Collin, my colleague back here, would like to meet with you guys and talk to you more about our oil and gas project. Thank you very much. Appreciate you coming.